It's a hat trick, yes. For third day on the trot now, Indian markets have closed in the green. It was 8,000, then it was 8,050, and today we've closed above 8,100 on the Nifty.
Yes, the journey has certainly been incredible. So we'll be talking about that and some stocks which were in focus today with our team of experts. So let's bring them on board. Jaideep Goswami, Head Institutional Equity at ICICI Securities, joins in. And we've got Mitesh Thakkar, Technical Analyst, MiteshThakkar.com. So we've also got with us Nipun Mehta, Founder and CEO at Blue Ocean Capital. And Nipun, that's the question I was speaking to Nikunj about as well. Do you think that one should really be analyzing the valuations of this market, or as Nikunj said right now, not too much analysis is required because the direction is clearly on the long side?
Well, when you're seeing a market which is a clearly unidirectional upward momentum market, very limited analysis would typically go into it, particularly when there is a feeling of, for a lot of investors, of being left out. Also, when you look at the fact that there are several mid-caps which are continuing to hit for some reason or the other an upper circuit, it could be 5, 10 or 20%. Clearly, there will be that further feeling of being left out. I think the analysis will come in if there is maybe a 1 or 2 day significant fall in the market. That's when people get wary. That's when people start analyzing, start looking at valuations. And typically the ones who've just entered in just before a small profit booking bout comes in, or some bit of small correction comes in based on an event or based on some institutional selling that happens. But other than that, I think clearly it's the heat of the moment which is taking a lot of the mid caps up, running ahead of fundamentals, running ahead of probably even March 16 results, and which is where in certain cases some of the investors, at least particularly the investors who've not yet sort of participated too much in the market and want to start entering now, need to be somewhat cautious. Yes, probably if you're looking at it from a purely trader point of view, which is only a few trading session kind of investment, that could be fine. But if you've got a sort of left out feeling with the option that you could probably trade for a month or two, you could probably be hit in the wrong direction.
Mitesh, another impressive close. It was 8,000 on Monday, 8,050 on Tuesday, and 8,100 today.
This week, in fact, has been very good. I think the gap up opening which we saw on Monday has clearly seen some kind of breakout, and momentum is on the upside. I think towards the session, closing of the session, there was some kind of selling happening over here, but that gap up has clearly re-established or stamped the uptrend. My sense is that we will head towards 8250, 8300 as a short-term target, eventually beyond that. And unless until we start breaking below 8050, there should be a market wherein all those intraday dips of 30, 40, 50 points should be used to add on to long positions. The good thing, which has been the fact that apart from the bank Nifty, the CNX IT and some of the IT names which also enjoy weightage in the Nifty have given very strong breakouts and buy signals. I think some kind of momentum will come in from those stocks. But apart from that, I think it appears to me, while on Wednesday we had a 1-to-1 advance decline ratio towards the close, but it appears to me much more a broader rally, and a lot of sectors are showing positive setup on the charts, and therefore the bullish optimism or the upside optimism should be maintained.
Jaideep, come in here because what is your view on how the IT pack has performed? Names like Tech Mahindra, TCS, both of these stocks hitting life highs. Is it time to partially book profits and put money into Infosys, which hasn't seen as much of a move?
Yeah, that bit of churning is probably a good idea, but one should be well off waiting for the unveiling of the strategy of Vishal Sikka. By the end of this month, it is anticipated that new strategy and game plan of the company will be articulated. Having said that, we are seeing some kind of bottom fishing happening in Infosys. Obviously, TCS execution has been excellent. So to what extent people will feel comfortable moving to Infosys is the other flip side. It may not always be the case that the cheapest or cheaper stock is necessarily going to give you outperformance in this market, but the market is actually rewarding performance very strongly. So we may continue to see an outperformance going forward of a more expensive stock because it is giving superior execution. So Infosys has to demonstrate that for the valuation gap to narrow.
Nipun, let's talk about the biggest outperforming group, the biggest sector which has made all the difference to the market mood and to the Sensex and the Nifty, the auto index or the auto stocks. Do you think auto stocks are now priced to perfection, or this is just the beginning of good times there?
Well, I won't entirely say they are priced to perfection. In certain cases, they are probably, you're getting the feeling that they are overpriced. But when you look at probably March 16, March 17 results, that's something which is probably March 17 is also getting gradually priced in. But I think the key is probably turnaround in terms of fortunes. You're seeing better volumes. You're seeing newer launches. There's a greater confidence within the industry itself in terms of these launches and the potential demand that is there. So you're seeing Tata Motors, Maruti, in terms of four-wheelers actually coming out with launches. Same goes for the two-wheeler space as well. You're seeing the positive impact that it's having on the auto ancillaries industry as well, and that's where you've started seeing a fair amount of positive performance, whether it is tires or forging or and all of that, or steering, virtually the entire space really. But really, I think that both the two and the four-wheeler space, probably except for certain issues maybe on Tata Motors domestic demand in terms of both passenger and commercial vehicles, or in terms of Bajaj Auto two-wheeler domestic demand or the growth that they're showing, except for certain concerns there, you're really seeing improved performance, improved volumes across the industry. You're seeing for Tata Motors global demand as well for the JLR business, the exports growth as far as the Bajaj Auto is concerned. So really there are improved volumes, better confidence in terms of launches. Probably our sense is you could see marginally improved margins as well going into the September quarter and the December quarter. So our sense is probably from the run-up that we've seen maybe in a Maruti and virtually across the sector, they seem to be reasonably richly priced when you look at very obviously the March 15 results, but March 16, given the kind of potential growth out of the newer launches and the higher profit margin that you might see, probably would ensure that there's this further sort of leg space still left in terms of the appreciation that you might see across both the two and four-wheeler space.
Let's get a sense of what dealing rooms are advising. We've got Pranay joining in with the details. Pranay.
Well, Avan, LIC Housing Finance is the first stock being recommended by dealers as a buy. We've seen that the benign liquidity conditions has clearly softened the bond yields, and as a result, the funding cost for the company will be coming down. Also, it is reducing its dependence on bank borrowings. It is also shifting its asset and liability mix from developer loans to project loans, and moving on further to mortgage demand, which is rising much faster than expected, and this should give it a yield benefit of nearly 200 to 250 basis points over the next 1 year. And also the funding costs are expected to come down by 40 basis points. With the improving economy, also the LPL concerns will come down, revisions and recoveries will kick in the next quarter. So valuations are also attractive, and ROE is also very healthy at 20%, so it can be a positional buy. KBIT Tech is another one. Now most of the IT stocks have been rallying to record highs and moving up even higher. This one has actually underperformed the pack even in the mid caps. After the first quarter weak earnings that we had seen, the management has said that it would be setting a floor on the margins. Also there were execution challenges which were exposed, and now they're working on it. Business momentum though remains intact, and that recovery should kick in from the second and third quarter through their SAP as well as niche strengths that they have in auto and engineering services, and therefore they're expecting a good recovery to the price of 200 as per dealers.
Right, Pranay, thanks a lot for that. Mitesh, this question is coming your way. Based on this week's price action, today's close, what is looking strong? What could be a good idea for tomorrow?
See, I think, despite the fact that the markets did face some selling pressure, I think LIC Housing Finance continued to march up for the day. There's a channel breakout, so it will be a good buy with a stop around 313.5. Look at buying around 320, 321 and look for targets of 335, 340 to begin with. The other buy is Bank of India, buy around 293, 294, keep a stop below 287, look for targets of 306.
Jaideep, any new ideas within the mid-cap space which haven't moved?
That would be a tough one to find sector or ideas which has not moved at all. But what we are finding is that in spite of the rally, because of significant earnings growth that is expected in some of the companies, they would do well going forward. That is a 2-year kind of call we have to take now. And there we are identifying stocks like Calcutta Electric Supply, CESC, or we have something like Eicher Motors, or you have something like Ashoka Buildcon. There is going to be a lot of capex going forward by NHAI, And road construction related companies are likely to do well. In mid-cap space, you have KNR construction for that matter. So some of these companies will over the next 2 years, and investors are also fairly attuned to this idea that stocks have already multiplied 4-5 times or by certain high percentage terms. So one cannot buy for 6 months now. One has to either wait for a correction to enter at a more appropriate price point or buy good business with a longer term investment horizon.
Nipun, we've got 30 seconds before we wrap the show. Give me your best idea.
Well, for us, cement is one of the best ideas that will be around for some more time. If you look at really the entire sector, it doesn't have the overhang of a huge amount of debt, so it's not reeling under interest cost. There's a fair amount of excess capacity that is there for a lot of these companies. In certain cases, additional capacity is coming up over the next maybe 9, 12, 15 months or so. You're seeing clearly expecting to see incremental demand coming out of a lot of the housing, smart cities and all of that. And our sense is probably even more than some of the large caps that are there, the mid caps in that, which could be say a Shree Cement or a Orient Cement or a Mangalam Cement, are likely to be probably much better ideas in terms of how they can take clear benefit of all of this potential demand that's likely to come in over the next 2 to 3 years and beyond. So our sense is cement has to be, even though there has been some bit of run up as far as some of these the stocks are concerned or this entire space is concerned, but clearly our sense is this one pocket which doesn't have the overhang of issues of that some of the other sectors are having.
Okay, gentlemen, I'm afraid we're completely timed out. So thanks so much for giving us your top ideas and running us through your views on the equity markets as well.